All right, everybody, welcome. Doug McKay, anti-wallstreetguy.com on the 25th of March, Friday, after the market is closed. Looking right now at a chart of the S&P cash closed on Friday. Not a great day, but still in the black. We closed at 1313 off the highs. If we were to take this line here, you can see that we ran into resistance at 1320. And we basically hit that almost to the tick today. We ran intraday as high as 1319.18. Now, we are above the 20-day moving average. We are above the 50-day moving average, which is the blue line. We are closed right at the 30-day moving average. We did get above 1300, which is a major area of resistance. Next area of resistance is 1320. The only fly in the ointment, even though we have the trend as long as of yesterday's close, primarily because we're above that 1304, 1308 level, is volume. Basically no volume today. We definitely want to see institutional sponsorship and have volume. But as always, if we had to pick one of the two, when they're both not working, we want to take price over volume. Now, let's take a couple scenarios here. The bullish scenario would be we're creating some type of cup or saucer here where we go up to basically 1338, 1340, trade sideways, and we go to new highs on the S&P. The flip side of that, or the bearish stance on that, would be we've had a rise here on lower volume, and the sellers are going to hit the sell button. In other words, we're going to go lower. If that takes place, our line in the sand, as based on what I see today, technically would be 1280 on the S&P. We would get very defensive, if not exiting our long positions and getting short at 1280. The reason for that is, again, the lack of volume on the way up. If we were to break 1280, that's major support, and then it looks like we're going to 1260. We break 1260, we're down to 1228, probably 1200. But as of the close yesterday, the overall trend in the S&P is long. So again, we have two scenarios. We continue to form this cup, maybe a handle, we go higher, or this is all a head fake and we go lower. This is another line that I'm going to put in here, a downward sloping trend line, if you will, on a daily chart that we broke above yesterday on a close, and obviously we closed above it today. So that was just more confirmation to get long, even though there was a lack of volume. Let's take a look at the INDU. We put this still chart up on the 23rd, which was Wednesday. We had this horizontal line in. We did say we would run into resistance. We basically hit the line right to the tick. But again, we are above 12,000. We're above 12,100. We did anticipate some selling at and around 1220, 12,225. And that's what we got. Hopefully next week we'll move through that and we'll move higher. If we were to break 12,000, certainly if we were to break this area here, all bets would be off and we would be exiting any positions tied to the INDU. All right, let's take a look at the NAS. NAS has been the weakest performer out of the three as of late. However, today we did close right at the 50-day moving average. You can see intraday it was much higher, kind of sold off thanks to RIM. But in any event, we would probably want to see the NAS close above 2750 for more confirmation. We'd also want to see an increase in volume. One of the charts that we did put up yesterday was a still chart of the IWM, the Russell 2000 ETF. We put this up yesterday when it closed here. You can see it traded considerably higher today intraday. I think it was up as high as 1.7%. But we did close at the lower end of the range. Somewhat predictable because there was resistance here, as you can see, right at 83, and that's exactly what it hit today. But again, the overall trend, the way I see it now as of the close on the 25th of March, even though there's a lack of volume, is long. But we will keep a tight stop on that, again, because of the lack of volume. All right, so think of 1280 on the S&P as kind of our line in the sand. Let's take a look at the metals. GLD, This was a little bit of a head fake yesterday. Intraday, it traded above this line. Today it looked like it was going to go lower. I know the spot gold prices were lower today. I would like to see this close above 141. And right now I believe I'm going to tighten it up a little bit in the managed accounts on Monday. I'm probably going to bring this up much tighter than this area of 135 here. If I was to bring it up to, let's say, 138, we were to get stopped out, we would re-enter again above 141. What I really don't want to do is write it down to 135, have it bounce, and then go lower. Let's take a look at silver. We did sell half of our position on Wednesday. We have the remaining half. I have a mental stop in there right now. But overall, metals, equities, the trend as of Friday today, the close is still long. Let's take a look at the 10-year Treasury. Now, we all know that at least anything tied to Treasuries, as interest rates go up, the value of those bonds go down. They work inverse. Last week we talked about the IEF and the TLT. I said that the chart was long, but it was kind of not, overly clear. That proved so this week. In other words, we had a rise in interest rates, a fall in the IEF and the TLT. If we were to trade above, you can see we kind of have resistance over here to the left, almost a left shoulder, if you will. If we were to get above 3.6, in other words, 36 here on the 10-year, that would be very, very bearish for bonds. Okay, very, very bearish for any bonds tied to Treasuries. But as it stands right now, the LQD corporate bond ETF, we're still above the 50-day moving average. Looks like we're going to test 108.40. If we take a look at TIP, we saw some selling at 110.50. Right now, we don't have any positions in the managed accounts in bonds. We do have a position in GLD. We do have a position in silver. We do have a position in equities. We also have a position in coal, KOL, the coal ETF. As anticipated, we were going to run into some resistance at 50, but I do like the fact that we broke above this candle this week on higher volume. You can see it down here. We had a little bit of a break up today, but we closed lower on lower volume. So we're still good here. You can see where our stop is. We will adjust that as the pattern pans out. We are also looking at copper. I'd probably want to see a close above 60. You see we have a little bit of resistance over here. You can kind of call it a sloppy left shoulder. That high and that was roughly in this area, around 59.60. We have yet to close above that, even though we're above the 50-day moving average. If we get above 60, then I think we're moving up through 61.50. So we're keeping an eye on that. All right, so that's the metals. We covered bonds. Let's take a look. We did cover the NASDAQ. And really right now, the overall market is long. There are individual positions, though. If you own them, make sure you have a stop. I always say, in simple terms, if something breaks the 50-day moving average, you would want to be out of that. Let's take an example here of RIM today. We put out this still chart over a month ago that said we wanted to keep our trailing stop at 6%. At this time, our stop was right around 64. So you would have been stopped out of this. And here we are today down 11.23%. So you always want to use your stops, and RIM is a perfect example. We also put up a chart yesterday of Apple. We said that if you were looking at this as a trade, the odds are it was going to fill this upside gap. We said this yesterday when it was here. It did fill the gap today. The overall trend is long here. I would have my stop kind of in this 335 area. If you really wanted to wait for further confirmation, let's see if it trades through 360. 360. In the meantime, I think we're going to be in a trading range between 335 and 360. What else do we want to look at? RIM, IEF, IWM, Apple. That's pretty much it. Again, if we look at the Dow, we do have resistance here because we have the lower volume. We always want to make sure that we have an exit strategy. All right, you guys, that's it. Everything is up as of the close on Friday. Bonds long, metals long, energy is still long, and equities turned long as of yesterday's close. We will see you on the radio show, or we'll see you next week on the blog. Thanks.